Hi guys, today we're going to talk about a simple price action technique you can use for an intraday setup. No, I won't give you a buy and sell, but I'll give you one way you can find out if the market is likely to trend intraday up or intraday down. But before we do that, let me tell you a story that you'll find interesting, which will help you understand the psychology of this technique. But again, before I tell you that story, give this video a like. We've all done a little bit of world history back in school, right? So there was a war happening, as you might have heard, and in the Battle of Waterloo, there was France on one side, and there was the coalition, let's say Britain, on the other side. Now, what was interesting, as this war was happening, there were rich people who wanted to continue to make money. Now, the Rothschilds, I'll mark it with an R, were some of the richest people of that time in Europe. And one of the people over there was Nathan. Now, Nathan obviously would find out what happens in the war before the general public. So this is the rest of the people. And of course, even at that time, there was a stock market. Now, based on who won the war, whether it was France, this was Napoleon Bonaparte, and the great general, never lost before, etc. And then there was, of course, the Britain side. Depending on who won, this would severely affect what stocks would go up or down in the different countries. Now, Nathan, being an insider, very influential, knew people on the field, would find this information before the general public. So now, I'll add this before. There was some information that he knew, information that he knew that no one else knew, and he could use that to profit. And that's exactly what happened. Nathan actually used the information before anyone else and used to profit from the market based on this. Now, what do you think? Over here, was it Nathan's skill that actually made him this money? Or was it just that he was privy to information the general public did not? In this particular case, it was purely information, right? He used his influence to actually make money based on this situation. Things right now are very, very different. SEBI makes sure things like this don't happen. However, even today, information is one of the most important things in the stock market. And I'm not talking about inside information. I'm simply saying research. Sometimes there is research that other firms are able to do with army of equity research analysts that you, sitting at home, are likely not able to do that. And if that makes sense, let me explain the psychology behind the strategy I'm going to tell you. So the market opens at 9:15 a.m. I'm not talking about pre-market, and closes at 3:30 p.m., right? Now, basically efficient market hypothesis, whatever is happening in the world, all that information is priced when the markets are open. There's buying and selling happening. However, there is timings when the markets are closed, which is the early morning time all the way to after 3:30. Now, during this time, there is something happening that is not priced in the markets. Now, let's suppose during this time after the market closes, researchers find out that Infosys mein kuch bahut amazing ho raha hai. Maybe they figured out something, maybe they're moving to a new industry, maybe they got a great contract, and the prospects of Infosys become good or slightly better overnight because of certain amount of information. Now, you might not have the time to actually find out, research, and know the implications, but these equity research analysts might. The beauty is, this is actually reflected, and I'm going to rub this off now, in price. As soon as there is overnight demand, what will happen is something called a Marubozu will actually form, which means as soon as the market opens, immediately the market shoots up and closes at its highest point. This is what it looks like. It looks like a normal candlestick. And over here, I'm talking about say a 15-minute chart or a 10-minute chart. And this is only the opening bar, the first bar of the day. And the first bar is significant because this information that happened after the market closed is being reflected as soon as the market opens. As soon as the market opens, the market went up and closed at its highest point. Notice, यहाँ पे there is no tail, the market didn't fall, and there is no upper wick. The market closed at its highest point. And this, I'm sure you already know, is called a Maro. I don't know how to spell this. Well, let's say this is the spelling, whatever. The spelling doesn't matter. The point is, the market opened, went straight up, closed at its highest point, opening bar. This basically means there was more demand than before, and there were more buyers, and likely that market will continue to go up. So let's turn this into a rule, very simple, it's on your screen. When the market opens as a green Marubozu and it's a big, strong bull bar, the market is likely to continue all the way up. We can also reverse this. If there is a Marubozu, that means there's no tail on either side, there's no wick on either side, and it closes down, big, strong red bar, it means the market is likely to continue downwards intraday. Only applicable for the first bar. Psychology makes sense. Let's see what this looks like on the charts. The first example over here is Nifty IT. Now I'm taking an index because index pe chalega, so in stocks it will work well as well, right? So look at Nifty. The first bar is a 10-minute bar. It's a simple red bar. There's no wick on either side, and the market continues down. Now you could use this for a variety of ways. I don't know how you would. You could take a position based on it. You could decide that the trend is going to be down today. That's your call. My job is to give you a simple tool that you can use to find out whether the stock will trend intraday or not. And the first bar, because of this new information, really is a good indicator. So look at Nifty. First bar red, continues downwards. Isn't that beautiful? Let's go down and see Reliance. So Reliance, the first bar is here, and you can see it's a big green strong bar. It looks exactly like this. There's no tail, there's no wick on either side, and then the market just continued upwards. Let's see another example. We have Reliance Industries again, 10 minutes. First is a huge red bar. It's almost a gap down from yesterday's close, and there is no wick on either side. Means there is very strong selling pressure, and the market continues down. लेकिन उसके थोड़ा sideways हो गया. But ठीक है, it was a bear day. It was not as trendy as we would like it to be, but anyway, it sort of worked in this case, but it did not trend downwards. All we know is there was strong buying as soon as the market opened. There must be some information that is pushing this forward. It could even be results, could be whatever. The price action reveals that there is demand, hence we assume it is likely to continue, right? Remember, these are probabilities and we're assuming. And if you can have probabilities on your side, well, that's what trading is. It's not about predicting, it's mostly about reacting. So in this case, it worked. Let's look at ICICI Bank. This one is interesting because we have this beautiful big green bar, and it's a Marubozu. There's no tail on either side, no wick on either side. But uske baad dekho sideways ho gaya. So in this case, it didn't work. But this setup is correct, right? It was still a bullish day overall. And before I show you the next example, abhi chat mein likho, price action is best. And if you can write a better English version, that's also fine. If you can help me with Marubozu ka spelling, wo bhi bahut madad hogi. And also tell me what should be our next video. Chalo, anyway, topic batana, I'll see you in the comments. One more example we have over here, and this is a failure example where actually the situation did not turn out as we expected it to. And this is ICICI, 10-minute. We can see a strong bull bar over here, really big, and it's green, and we can see that it has no wick on either side. It is a Marubozu. Market moved up in the next bar and then completely reversed. So this is an example of a failure setup. I'm sure you can find other examples as well. You can even see this on something like the 30-minute. And I'm sure you can find this in higher time frames as well. Also, you might be thinking, where do I buy? Where do I sell? Where do I keep stop loss? How do I select an actual stock to trade? See, all of these are actually advanced concepts. And if you don't understand the basics, you can, and probably 99% will lose money, not to mention lose your capital. But there's one solution to this. LearnApp has started something called LearnApp Prime. It's free, but not everyone gets in. The link is in the description. Fill out this form. If you get selected, and only a few people get selected, we will spend face-to-face, well, not face-to-face, Zoom time with you over 3 days, where we'll start from absolute zero all the way to creating a trading system. And it's done in a community, in a batch, where you can meet other traders who have no idea what trading is. So you can start from nothing and hopefully become something. So try out LearnApp Prime. The link is over there, and I hope you get in. If you found this interesting, please let me know in the comments. Give a like, give a share, so this channel grows, because इसमें बहुत मेहनत लगती है. It takes a good amount of effort to make a video like this. So say something nice in the comments. Yeah, that's it. See you in the next video. Goodbye.